Global oil demand will climb this year by the most since 2015, the International Energy Agency said, amid stronger than expected consumption in Europe and the US. The International Energy Agency, which advises most major economies on energy policy, increased its estimate for demand growth in 2017 by 100,000 barrels per day to 1.6 million barrels per day, or 1.7%. The rebalancing of oversupplied world markets is continuing, it said, with OPEC supplies falling for the first time in 5 months and inventories of refined fuels in developed nations subsiding toward average levels. Demand growth continues to be stronger than expected, particularly in Europe and the US, the Paris-based agency said in its monthly report. The impact of Hurricane Harvey, which struck Texas last month, on global oil markets is likely to be relatively short-lived, the International Energy Agency said. Local stockpiles were at comfortable levels before the storm hit, while releases from government reserves and plentiful imports from Europe allayed any shortage. Oil prices remained below $50/barrel in New York, less than half the level traded 3 years ago, as OPEC and fellow producers struggle to clear a global glut despite cutting their output for almost 9 months. Still, the International Energy Agency's report shows producers are having some success in their goal of reducing bloated oil inventories back to typical levels. Stockpiles of refined fuels in developed nations were close to their 5-year average in July, and could fall to or below this level very soon, according to the International Energy Agency. Crude oil inventories were steady in the same month, when they typically increase. Based on recent bets made by investors, expectations are that markets are tightening and that prices will rise, albeit very modestly, the agency said. OPEC improved its implementation of the accord to reduce supply last month, to 82% from 75%. Its 10 partners fully delivered on their pledged cutbacks for the first time since the agreement started in January, as Russia and Kazakhstan conducted seasonal maintenance work at oil fields, the International Energy Agency said. Nonetheless, if OPEC keeps output at current levels, the group is unlikely to reduce stockpiles dramatically either this year or even in 2018, Neil Atkinson, the head of the International Energy Agency's Oil Markets and Industry Division, said. Although the oil market coped relatively well with the disruption caused by this year's storms, the damage to US facilities will still be felt, according to the report. The country's production was curbed by about 200,000 barrels per day in August and 300,000 a day in September. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube new video channel and connect with us on Facebook, Twitter or LinkedIn.